December 28th, you're at the dealership. You're about to sign papers on a $75,000 truck you don't need. Why? Because your CPA called and said you owe 80 grand in taxes, and you think this is how you save money. Spoiler alert, it's not. Let me explain why you're about to make a huge mistake. I'm Matthew Grenade from Dragonfly Insurance, and this is the business of building, where we give contractors, subs, and tradesmen the straight talk on running a better business. Today, we're talking about year-end tax planning, and more specifically, why spending money just to save on taxes is one of the worst financial decisions you can make. Here's how this movie plays out every single year. Business was good. Maybe you landed that big commercial job. Maybe you finally got paid on projects that had been dragging. Whatever it is, you made money. Then your CPA calls. You're going to owe about 80,000 in taxes, he says. Immediately you think, I'm not giving the government 80 grand. I need to buy something. So you start shopping. That new truck you've been looking at, that excavator, that compressor, I'll write it off, right? Here's the problem. Let's say you go out and spend $100,000 on equipment. You're in a 40% tax bracket. Federal and state combined. Pretty normal for a successful contractor. So that purchase saves you $40,000 in taxes. Sounds great, right? But here's what actually happened to your bank account. You spent $100,000. You saved $40,000 in taxes. You're still out $60,000 in real cash. That's $60,000 you can't use for payroll, can't use for materials, can't use when your big customer pays you 60 days late instead of 30. Now, if you were planning to buy that equipment anyway, if you've got 3 jobs lined up in January that need it, then great. The timing works and the tax benefit is a bonus. But if you're buying it just because I need to write it off, you're not saving money. You're just wasting money. Now here's where it gets interesting and where you really need to pay attention. In July, Congress passed a new law that brought back something called 100% bonus depreciation. Stay with me, I'm going to explain this clearly. Bonus depreciation is just a fancy term for being able to write off the full cost of equipment in year one, the first year you use it, instead of spreading it out over 5 or 10 years. It used to be 100%, then it started to phase down. Dropped to 80% in 2023. It was supposed to go to 60% this year, then 40% next year, 20% the year after, and eventually zero. That created pressure. If I don't buy it this year, I'll lose part of the deduction. A lot of contractors made rush decisions because of that countdown. But the new law killed that phase down. It's back to 100% permanently, which means, and this is the key point, there is zero tax reason to rush a purchase in December. None. The deduction will be exactly the same in January or June or next November. So if you're planning to buy something in December, it better be because your business actually needs it, not because the calendar says it's December. Here's the question you need to ask yourself before you buy anything. If this purchase saves me $0 in taxes, would I still buy it? If the answer is no, walk away. If the answer is yes, then ask the follow-up questions. What's the actual return on investment? That $75,000 excavator saves you $30,000 in taxes. Fine, but will it generate $75,000 or more in additional revenue? Be specific. I think I get more jobs doesn't count. Is this thing going to run 200 days a year or sit in your yard for 10 months while you make payments? Have you run the rent versus buy numbers? 2 jobs need an excavator. Renting costs 5 grand. Buying costs 75,000. Even with the tax deduction, you're still out 45,000. That's money you couldn't use for payroll or new bids. Let me tell you about Joe. Joe runs a small excavation company. End of last year, he had a great year. Made about 300,000 in profit. Tax bill was going to be 100 grand. So he bought an $80,000 mini excavator to save on taxes. Saved him 32,000 on the tax bill. Felt great in December. By spring, he hadn't used it once. Not once. And when one of his big customers paid him late, he didn't have cash for payroll. Had to delay paying his subs and almost lost his crew over it. Here's the kicker. When he finally did need an excavator for 2 jobs, he could have rented one for about $3,000 total. He spent $80,000 to save $32,000 on taxes on a problem he could have solved for $3,000. Don't be Joe. By the way, I wrote a detailed post on this with all the numbers and examples. Links in the description below if you want to dig in deeper. Now, if you've got a bonding requirement or you think you'll need bonding in the future, here's another critical thing. Before you sign anything over $50,000, call your bonding agent. Ask them, how does this purchase affect my bonding capacity? Because when you spend $75,000 in cash in December, your working capital drops, your cash reserve drops, and that can hurt your bonding capacity. I've seen contractors make big purchase in December and then find out in January they can't get bonded for the next job they wanted to bid. One phone call before you buy can save you from that mistake. You know what the best tax move is that most contractors never make? Max out your retirement accounts. SEP IRA, solo 401k, whatever your CPA recommends. It will reduce your taxable income. You get the deduction, but the money stays yours. It's just in a retirement account instead of a dealer's pocket. So instead of spending $75,000 on a truck to save $30,000 in taxes, you could put $75,000 into your retirement account, save the same $30,000 in taxes, and still have $75,000. It's just in your retirement account. That's spending that builds wealth, not spending that depletes cash. Look, The tax rules are better and more stable than they've been in years. You can take 100% bonus depreciation whenever you need to. No deadlines, no use it or lose it pressure, which means there is no excuse for making panic decisions in December. Make smart business decisions. The tax benefits will follow. Don't spend money just to save on taxes. Your January self and your bank account will thank you. All right, 3 things you need to do this week. 1, schedule a meeting with your CPA. Not in December, now. Block 2 hours and get it on the calendar. 2, pull your year-to-date profit and loss and your first quarter 2026 project list. Match your spending to actual business needs. 3, if you're thinking about buying anything over $50,000, call your bonding advisor first. Again, that blog post has step-by-step instructions for how to think about all of this. Link is right below this video. And if you found this helpful, hit like and the subscribe button. Next week, we're talking about something else that's eating into your profits: rising insurance costs and what they call nuclear verdicts. Trust me, you need to know what's coming. I'm Matthew Grenade. This is the business of building. Stay smart out there.